the most definitive value we can, almost the biggest guarantee of what we can control, right? And to your question, right? Like, why do people fear this, right? I think
Yep.
people should fear it less and less. If Trump, right? You remember that 2017 election.
Welcome to the Next Level Income Show, where it's our goal to take your income, your investments, and your life to the next level. I'm your host, Chris Larson. If you haven't yet, get a copy of our book for free at our website, nextlevelincome.com. That's www.nextlevelincome.com. Just click on the book link, and I'll even send you a copy if you put your address in. I'm going to share the story today on the podcast how 10 years ago, my accountant at the time delivered a rather unfortunate message about the amount of taxes I owed today. And we're going to talk to Davis Oliver today with the Taxes Saved team about how you can avoid a similar situation. Davis Oliver is a tax strategy innovator who's helped clients save nearly $90 million in taxes through strategic business structuring and alternative investments. After earning his degree in economics with a minor in entrepreneurship from UNC Chapel Hill, Davis began his career as an analyst for an oil and gas company in Texas. He eventually transitioned into working with his team at Taxes Saved, and he began educating CPAs on advanced tax planning strategies involving alternative investments. He's trained over 1,000 CPAs in this, and today as a leader of the Taxes Saved team, Davis oversees 4 tax strategists and 22 CPAs led by a head CPA with 10 years of Big Four experience. The firm specializes in serving 3 key client groups: high savers with substantial tax-deferred accounts seeking Roth conversions, which we'll talk about today; successful business owners, which I know a lot of our listeners on the podcast are; and high-income W-2 employees. You might not think you have a lot of opportunities out there to save on your taxes, but Davis and I are going to talk about, even if you are making the majority of your income through a W-2 source, you do have strategies available. Through strategic partnerships with real estate syndicators and financial advisors, Davis and his team have helped untaxed millions in tax-deferred assets, converting them to tax-free growth in Roth accounts through proprietary Taxes Saved planning process. And when he's not optimizing tax strategies, Davis competes in triathlons, explores roads and trails on his bike, which I also love, and enjoys walks and travel. Davis, welcome back to the show.
Hey, thanks, Chris. Great seeing you again. Thanks for having me.
Yeah, great to see you. And this is always a big event every year on the podcast. We always do a big, tax edition, a tax special. And I know a lot of our listeners are, probably still have a little bit of a open wound last week from paying their taxes. And, our goal today is to talk about, hey, let's not wait. Let's see what we can do to proactively plan for our 2026 tax situation. And, investors love talking about, oh, what's the next investment and how, what can I do with that? But I always like to tell investors, hey, do you have a tax strategy? Because if you can save $1 on your taxes, that's $1 directly to your bottom line, or another $1 you can invest. So I think it's important before we start today, Davis, is to highlight, if you're listening today and you're always looking for different investments, and that's one of the reasons you hop on the show. One of the first things you should do, after you're making money, is optimize your tax strategy. So,
Yeah.
Davis, I'll let you introduce yourself and share a little bit about, Taxes Saved and what you guys do.
Yeah, thanks, Chris. I thought you said it well, right? Being proactive. And I think that's one of the biggest things we do here at Taxes Saved. And you see it, the slogan above my head here, right? Keep more, live more, leave more.
Yeah.
That's really what we help clients do on a daily basis with the 7,000 page tax code that we got, right? We joke a lot with clients, right? A lot of these things are written in tax code, or really anything written by the government is written in pencil, not pen, right? These things are set to change. So we work for our 22 team CPAs to help our clients, Chris, really proactively, whether you're a high earning income W-2 employee, which a lot of the clients of yours and ours now we've helped be proactive there, and keeping more bottom line through strategy and some of the things we offer. We also help business owners, high income earning business owners. And then a big niche you and I know, Chris, that we serve is really people that are going into retirement or in retirement, right? A
Yeah.
big thing we address, and we've talked about before, Chris, and people that are listening that are maybe new, is the long-term tax risk a lot of our clients face with these RMDs, these required minimum distributions.
Yeah.
So we do a lot of planning as well as helping clients take a lot of tax deferred assets like 401k IRA and move those over to Roth with deductions strategically as well. So that's a little bit of the client we serve. We've been doing this going on 30 years. I myself have been here at Taxes Saved 6 years now, helping clients successfully and use the tax code to the fullest ability. But yeah, that's like you said, it's an exciting time, right? Especially with everyone typically paying a big tax bill in this time of year.
Yeah.
But luckily for a lot of your clients that we've helped, Chris, it's more of two things. One, and that's what we'll talk a little bit about today, is the ones that were proactive.
Yeah.
Now they're seeing the tax bill they didn't have to pay with the planning we did. And then the ones that were a little bit more reactive, but still took some effort to make something happen with us. Now they're looking at what kind of refund they're going to be getting back here in the next few weeks.
Yeah, I love it. And we got a few things we can kind of walk through sequentially here.
Yeah.
I want to kind of split into two different categories because, I'll tell my personal story on like the W-2 tax hit. But you bring up another good one, which is the RMDs, required minimum distributions. And
Hmm.
one of the things I hear from our investors, Davis, that have been investing in real estate, they've grown their passive income. Some of them have pensions and other sources of income in retirement. And they're
Yeah.
like, hey, I don't really want to touch my qualified retirement money. But they say, hey, I just found out I have to start taking money out of my qualified plans, even if I don't need it. And my stepfather falls into that bucket.
Yeah.
And this is why we've talked about qualified plans a lot on this show, because a lot of people don't realize they're like, hey, I didn't have to pay taxes when I was 30 years old and I was putting money into my 401k. But as that money's grown, they're actually having a bigger tax bill in retirement. So we're gonna circle back to that. I'll never forget. I was sitting with my accountant 10 years ago. It was 10 years ago this month, and he pours me a bourbon and he hands it to me, and I'm like, okay, this is interesting. And I'm
Not
like, are we
great.
celebrating something?
Yeah.
But what he was doing was he was helping me drown my pain. And he goes,
Mhm.
what was the number you were expecting to hear today? And I knew holding the bourbon in my hand that number was going to be bigger than I thought. And
Yeah.
that year we paid about 30% in taxes. We had a really good W-2 year. My business, my income was W-2. My wife's business, we had some exits and some properties, and we had a really large tax bill. And I had to cut a very large check on top of my withholding, and I walked out of there and I was like, there's got to be a better way to do this, and that was the beginning of how we started restructuring, not only our retirement holdings but also our income. So when it comes to, you mentioned you guys can help W-2
Yeah.
employees. And I've used some of the strategies that you guys do over the years.
Mhm.
But talk about why W-2 income earners, high income earners, typically think there's nothing they can do about their
Yeah.
tax bill and how that's not actually true.
Yeah, yeah. So a lot of the tax code, the 7,000 pages we got, Chris, to your question, a lot of it's framed around business. Business owners get a lot of the incentive, right? Because the government, we all know they're bankrupt, right? So they put these things in tax
Yeah,
code.
effectively.
You and I, the retail investor or institution, can get a break by funding it with your own capital, right? Because hey, government's saying, I won't touch it, but hey, we'll put in a piece of tax code that you can and get a tax benefit because you're providing commerce, economic value, ROI to the government at the end of the day, right? So that's why they give
Yeah.
us the break. But a lot of people that are W-2, they think, right, it's a lot of plug and chug, right? Your paycheck, you don't really see what you're making bottom line. You see what you're making after tax because it's withheld from your paychecks,
Yeah.
right? And so for a lot of clients, especially Chris, the high income earning W-2 clients we sent over, where we help them the most in this type of planning is we'll layer in a business strategy or an investment strategy that gives a nice tax incentive. Let's say one that provides a 5 times deduction, meaning, right, you outlay 100 grand, you're going to get a $500,000 deduction. And not to get into too much of the detail on that, but just concept today, right? That 5 times deduction, right? For let's say a W-2 earner that's making $1 million, right? Depending on their state, they're probably paying in about a third, right? They're working about a third of the year, about 300 grand is getting withheld every month out of those paychecks, right? For the entire year,
Yeah.
right? And so the clients that we helped and have helped, especially you've sent over, where we, for example, one client right now, we know what his strategy is, and we know we're cutting that $300,000 typical tax bill he would typically have withheld out of his taxes. From knowing what strategy we're doing early on, we've had him change his withholding, right? Because it's not that's the phrase is not what you make, what you take home.
Yeah.
These deductions give us that ability to keep more, actually report, though we made 1 million, we're reporting that we maybe only made 500,000, right? We cut our tax bill in half, right? And so now, though it cost them something, we're not having them out, we have to wait for a refund, right? That W earner, right? Now he gets to keep more of his paychecks every month and start stacking, taking that return and placing it in other asset classes that doesn't allow the government to get another bite of the apple. So that's
So
the idea, like you said, when you had that pain, by being proactive the next year, right? Layering these things in. Now, now you're not having to drink whiskey, right? It's more of wow. Now you're celebrating for what you
yeah.
have to build to do, right? That's the difference maker for sure.
Yeah, no, that's a great point. And for somebody that's paying, say, $10,000 a month in tax, and they cut that amount, like even in half, that's another $5,000 in their pocket every month that they can use for a full year. And that's the thing.
Mhm.
I've always, I've said this, I've had this conversation multiple times where I always tell people, hey, I want to owe a little bit in tax at the end of the year. People are like, why would you want to have to write a tax bill? I said, well, because I if I'm making 10, 15, 20 plus percent on my investments and I'm letting the government hold $100,000 of my money every year, tax free or, basically for
Interest free,
free,
yeah.
interest free,
Hmm.
then, I would rather have that in my own pocket and have the ability to pay that, a year or a year and a half from now, depending on when that's due, or, not pay it, not pay as much and be able to put that money to work. So I think that was one of the biggest things for us was, understanding withholding and having a tax strategy in place and going forward. And, again, for the W-2 earners out there, most of us are comfortable with understanding you go in and you adjust your withholdings, and it's a very easy process. But people get scared of that. Why should people look at the IRS like a partner versus an adversary, Davis?
Yeah, no, that's a great question, Chris. And I think a lot of people forget, right? The war, right? The Revolutionary War, flashback forever ago. That was over like a 3% tax, right? And here we
Yeah.
are, everyone's gotten accustomed to paying, be conservative, 20 to 30%, right?
Yeah.
And that's probably effective rate, for being honest, depending on the state
Yeah.
and your
I
income
mean,
range.
shoot.
That,
Yeah. I mean, let's talk about it. Let's talk about that for a second. If you look at incremental tax rates, I was just reading New Jersey was the first to pass a state tax back
hmm.
in the second half of last century. I think it was in the 70s.
Yeah,
So it state taxes haven't even been around that long. But if you're in California or New York now, you can be paying an effective marginal tax rate of 50 to 60% of
yeah.
every dollar you make.
That's
And
great. I mean,
that's,
think about that. Like we were saying, Chris, I mean, you're literally working over half the year. Still got literally a couple months left before you get to keep a dollar for yourself.
yeah,
Like I think that to me is a bigger fear, right? And than just paying the tax, right? Like to me, like that's a crazy. We all have, time is the same commodity we all share, very finite, right? It's the most
yeah,
valuable thing, right? And especially when we help on this tax piece, right? That knowing tax code and using this type of planning adds the most definitive value we can, almost the biggest guarantee of what we can control, right? And to your question, right? Like, why do people fear this, right? I think
yeah.
people should fear it less and less. If Trump, right? You remember that 2017 election, right? Where Hillary says, well, you paid only $750 in state and federal tax. I'll never forget that. Right. And early on in my career, I was like, man, like, so he actually did that. Like, how is he doing that? I remember,
Yes.
kind of looking these things up and right. And it's not just written black and white, right? These are the things, it's kind of trial by fire, trial by error, just like it was for your own circumstance. But that's where layering in our CPA team that have the experience, use the strategy yourself, which you know a lot, Chris, working with our CPA team, they're eat and breathe this stuff. Not only have they filed it before, they also use it themselves, right? We're big on eat on cooking, right? Just like you and I have over the years, Chris. And so that adds a good, validity to it and making sure they're not feared of what they're, implementing and how these things work. But then additionally to the point around Trump, if Trump's only paying $750 in tax, why can't you? Right? Like that's kind of the question.
How is he
Yeah.
doing it? And
And
yeah,
that's
it's,
mhm.
I always think it's interesting, as my boys go to the same school that you and your brother went to.
Hmm.
And they're 16 and 14 now, and we have these discussions, and it's like, you know, when my younger son comes home and he was upset because one of his teammates wasn't performing at practice and he got well, he's like blaming other people for the performance of the team. And I
Yeah.
said, well, wait a minute. And I said, well, what can you control? What's in your
Hmm.
control? Like let's think about that. So that's one of the things I always tell my boys, like, what's in your control? If you can't control somebody else's performance, how can you improve yours and do
Yeah.
that? And then what I tell my older son, whose goal is to play D1 lacrosse in college,
Hmm.
is if you want to achieve that goal, find people around you or that have done that and ask them how they did it. And it amazes me that successful people say, well, hey, how do people do this? And the people that aren't successful just complain. They're like, hey, Trump's not paying enough in tax. Elon
Yeah.
Musk
Woe
isn't
is
paying
me.
enough in tax. And it's like, well, wait a
Hmm.
minute. How are they doing that? And that was a great thing about his response. Actually, Dave Chappelle is my favorite that he talks about this. And he goes, yeah, Trump goes, yeah, that's because I'm smart. He goes, and all your friends do it too. And it's like, these are the rules. We none of us would pick up a board game or play cards or poker and say, well, maybe some of us would, but most of us wouldn't say, well, hey, let me just play this game where I've got money at risk, not
Yeah.
understanding the rules. And I love that's what you and your team do is you work with your clients to explain the rules to them and say, hey, this is your position on the board, so to speak. Here is how you can apply the rules so you can move around the board faster, how you can increase your chances of success in this. And I think that's a really important point I want to make on today's show, which is, if you don't understand the rules, you need to understand how they apply to your situation and see how you can change your situation, often through very simple changes to really do that. We talked about W-2 earners, Davis, but what advantages do business owners have in terms of the tax code, and how does your team work with those clients versus W-2 earners? How does that differ?
Yeah, no, I mean, quite frankly, the business owners have it easier from a planning perspective
Yeah.
and a timing perspective, right? Because unless you change that withholding, we get on, our guns and meet with clients that are W-2. Until we really know what they're doing, we can't change withholding, right? That's kind of tax suicide, right? Where they'll have penalties and interest, etc. If we don't have a strategy at play. But for business owners, the mantra of what you're paying, which after your expenses, right? It's after your expenses being key there,
Yes.
right? You have for the business, so we can really predictably control what we're paying in on quarterlies, right? So we have more time to pay that in for business owners, right? We can kind of plan. All right, well, this quarter we're going to have you pay this in, or ideally pay none to less than what we'd expect with proper planning. So by being, kind of more proactive, we need to be typically more proactive for W-2 to really give them that time present value of return of tax
Hmm.
immediately. Business owners, still timing's key, but we have more time because they're paying a tax bill in based on expected income after expense versus W-2. It's just getting sucked out because their employer, right, that's taking the tax out for them doesn't know they have maybe a business or other expenses going. So that's why we got to be more proactive there for W-2. But business owners, that's why, a lot of the strategy W-2 owners eventually employ are things that have a business because there's a lot of hidden kind of freebies, we like to say. Well, there's not
Yeah.
many freebies. Nothing's free, as you know, Chris. But
Yeah.
freebies in the sense of layering in other deductions we can take in the tax code from a business that might be newer, right? Like the
Yeah.
Augusta rule, S corp election, as you know, having young kids, hiring your kid, so many different variables there
Yeah.
that we can layer in once a W-2 employee maybe adds a business that they didn't think they had that would either they thought would take a lot more time than they had, because that's a big thing, right? Being time focused there for a lot of our clients. But they'll realize a lot of your clients, as you know, realize, oh wow, there's kind of the laziest ways of what I need to do here to meet the requirements to still save a lot of tax and build these things out that I didn't initially have as a W-2 earner.
Yeah. No, absolutely. And that is it's a big advantage. And I would say, one of the best things is if you're a high income W-2 earner and you have a spouse that can
Hmm.
or has a business, that's one of the things we did is my wife was working as an architect.
Yeah.
And I don't know if I shared this with you, but the first year after both my boys were born, and they were in daycare. My wife was going to work every day, the
Hmm.
weekdays, and she was only working part time. And after that first year, I sat down and I did the math, and I showed her a number. It was $11,000, which isn't a huge number, but there's a very important caveat. There was a negative in front of that number, and that's what we netted after what my wife made, how much taxes we paid, what we paid in daycare. It cost
Yeah.
us $11,000 for her to work. By her starting her own business, not only did she make more per hour, but we took some of those avenues into our control with respect to income and expenses, and we were really able to optimize that. And I was still a W-2 employee. I was making a nice six-figure income, but we were able to optimize some things and take advantage of that. So I would say if you are a high income earner, maybe like a surgeon, like I've got a good friend, his wife started a real estate business and they were
Yeah.
able to optimize their blended income and expenses and tax bill based upon that. So there's some really powerful things that can be done by blending those two together. Any thoughts on that?
No, we were just kind of talking a little bit about that concept, here, right? Because everyone knows like the Trump family is this big family office, right?
Yeah.
Like they have, all these ventures from Bitcoin to, what do they do? Make altcoins this year or past year, right? What other businesses are they in? Oil and gas, they touch everything. Real estate obviously being the big
Yeah.
one, right? But really kind of what we're talking about there is turning kind of making your family turning your family into almost your biggest asset, kind of that
Yes.
fractional family office concept we were just kind of
Yes.
talking a little bit about, Chris. And one, I think a lot of people fear that like, oh, I got to have mega millions to be this like family office. But the reality is those family offices started from somewhere, right? Like, I
That's
mean,
right.
those,
Yeah.
and it's a scale out, right? Kind of like you said, maybe turning your better half into the biggest asset of the family portfolio, right? Like take, all right, like, it's not, like we said, not take what you take home, but the biggest determiner of that, which you've done an amazing job over your career, Chris, is kind of making your passive income greater than your active income, right?
Yes.
The way to really do that is layering in, starting with the tax like you did, and making your wife a real estate professional, which we help a lot of clients do, right? Or maybe having, a lot of clients who help having maybe their wife that, was doing a vital job of raising their kids, now later also doing, kind of doing maybe a couple hours a week of, one of their, equipment businesses or so, something that is also going to help them save tax and build this cash flow.
Yes.
So that's huge. I think for a lot of clients, it's that fear of starting that it's, kind of like I'm sure probably for you, maybe your wife is a little daunting, right? Like, hey, like we're gonna like have to create this business and run it or do payroll or however it scales. Do we have to file a separate tax return? There's all these different things.
Yeah.
But when you have a team like what we have here at Taxes Saved that really connects it all together and makes sure it gets done, then it can easily grow on top of each other, kind of like what you guys have created over the year. That's a big value add we help a lot of clients with of
Yeah.
kind of creating that office concept of taking assets and growing from a tax to cash flow to equity and then keeping it from there on out.
Yeah. No, excellent point. Thanks for um, kind of reinforcing that because it can seem daunting, especially, like my wife was like, you've got an MBA, you've been, investing for all these years. I don't really understand this. Now she's very comfortable. She works with
Yeah.
our accountant who you know very well. And it's very simple. Everything's automated now. Technology has made
Hmm.
it very easy. Our boys have been
She's
working.
yeah, I was gonna say the boys are probably working. She's probably saying every meal's a write-off now, right? We're talking about business with the family. That's
Yeah,
that's
you
what
mean
usually
even
where it
things like
goes.
that. You can, that's a great point. My wife and I have multiple businesses together,
Yeah.
and one of the neat things is that the IRS tax code says, hey, you all can go have a meeting, and
Hmm.
we can go. We've taken trips and said, hey, we're gonna have an offsite trip. We're gonna have our meeting. We're gonna record everything. We're gonna go through all this, and we do. We spend a lot of time talking about our businesses and planning. If you and I were partners and did that, that's a deduction. There's no difference in that. So it really is cool, especially if you enjoy spending time with your spouse and you have
Yeah.
businesses together. There's things that it's just an accounting line that you can do to actually save taxes by not changing your spending habits, and that's one of the big things. One of the things I've heard from clients, Davis, is okay. This sounds interesting. It
Hmm.
sounds it sounds complicated, which we kind of addressed, but it also sounds kind of too good to be true.
Yeah.
Isn't the IRS going to come after me if I do some of these things?
For sure. We get that all the time, Chris. And it's a fair one, right? Because, you've gone from paying the tax to me telling you or, trusting that we've done this successfully for many years that we're going to not have you pay the tax. And if anything, you might even get a refund, right? It's kind of like, oh, I'm doing some voodoo magic over here. But the reality of it is, I think for first time clients that work with us, it's kind of after that first year, right? Kind of like the client, Chris, we just talked about you'll be talking to later, right? It was his first time working with us, but now he's a business owner client, I think I'm talking about here. He was going to pay about 300 grand in taxes. I think he's now paying, I think, 50 grand, right? I mean, he saved about a quarter
Wow.
million dollar in taxes, but it wasn't until he's actually experiencing it right around this time with the check he's not having to send in, being a business owner for the income he made,
Yeah.
that now he's really seeing the value, right? This is
Right.
good, right? And then there's always the naysayers fair too, right? When am I going to get audited, right? I mean, is this going to draw a red flag, right? And that's fair. But the reality is, Chris, we're not here to draw red flags, right? We have a team
Right.
of CPAs from Big Four experience, 40 years of tenure, right? This is not their first rodeo, right? So for many of our clients, a lot of them think they're going to come to us and we're just going to zero out their tax bill. The thing around tax planning, it's crucial for people to know is it always comes down to the numbers, right? The numbers give us our answer, right? And really helping clients understand that. And so we're not zeroing people's tax bill out, right? Clients are still paying taxes because our belief, Chris, right? We don't want to raise red flag. If you made $1 million and now first time business owner, you have a huge Schedule C loss, and now you have a reportable zero on your tax bill of income, that's going to raise a red flag, right? We're not in that
Sure.
business, right?
Yeah.
That would raise a red flag, right? For those who are listening today. We believe that even with Trump in office, these 10 and 12% brackets we have now are gifts, not going to be here forever, right? So for a lot of our clients, it's kind of getting them from those high 30 brackets that are a criminal crime plus 40, 50% like we're talking about down into these lower brackets, right? Still having reportable income, right? So that's one
Yeah.
thing to kind of avoid the red flags to question and too can be true.
Yeah.
Some other things that I think a lot of people think too can be true. Every strategy is going to cost something. And the other thing that's crucial, Chris, is that the government doesn't give active income deductions like we're talking about here for W-2 income, 1099, Roth conversion, you name it, unless you're taking risk, right? You don't take risk. The government says that's either passive or you're not getting a deduction for it, right? That's,
Right.
that's kind of the trade-off there. But it's, of course, educated risk, right? So we go through that with a lot of our clients, but the big trade-offs typically of why a client would choose to do a strategy versus just paying the tax. One, they have the underlying belief, as we all do, that we don't like how our tax dollars are being spent, and we believe you can be a better steward of those, right? So that's number one. If you like paying tax, no offense, you won't offend us, Chris, right? I don't think you'll be offended, right? Go ahead and keep doing that. Someone's got to do it.
Well,
But Trump and I,
you can even lower
right?
your tax bill and write a voluntary check to the U.S.
Yeah,
Treasury,
yeah.
which
Feel free.
I always wonder. You got people like Warren Buffett say, "I don't pay enough
Yeah,
tax" or this, and Mark Cuban, he was in an interview and he was, I think it was with Tucker Carlson. He's talking about how we need to send more money to Ukraine, and Tucker
yeah,
turned to him and said, "How?" He's like, "You have family, that's Ukraine." He said, and Mark Cuban said, "Yeah, I do," and he goes, "Well, how much of your personal money
yeah.
have you sent to the Ukraine?" He said, "None." And it always intrigues me. It's like, you say I'm not paying enough in tax. What's stopping you from writing that check to the US Treasury? They'll cash it. They'll cash that check.
They've already cashed. They got 40 trillion cashed, right?
Yeah, plus unfunded liabilities.
Yeah,
Yeah, so it always humors me when people say, yeah, it's like, well, do you really feel like the government is a better steward of your money if you're not just sending them money voluntarily? No, you probably send it to a private charity or donate it directly to
yeah,
a charity of your choice. So, or even better, and this is I think a really important part of the tax code. The IRS, the tax code incentivizes us as business owners
it
to
does.
reinvest, to invest in
Yeah,
real estate through 1031s to keep that money growing because they understand as a business owner, I can decide, hey, if this is a good payoff for me, I'm going to increase my business 25, 50%. There's going to be more income ultimately flowing back to them. So it isn't an either or. And I think it's a big part of the philosophy of, what we're talking about.
for
Um,
sure. But a
yeah.
lot, a lot of clients are pretty analytical and they should be around this stuff, right? Because like, what are the trade-offs, Chris?
Yeah.
And to that point earlier, like you're saying, right? Like Uncle Sam's already spent it for you if you send it in. But the trade-off is three things typically for clients when you do strategy. Number one is, are they saving more in first year taxes than what they're outlaying in the strategy itself? So that usually needs to be win number one, which is common in the planning we do.
Yeah, so they're
Number
positive
two,
ROI. Makes sense. Yep.
yeah, tax savings ROI is it greater than what we outlaid? That's number one. That's a good trade-off win. Number two, is it cash flow positive, which many of the business investments are. That's the part. Obviously, there's no guarantee of the return side, but there's always a track record success of them playing out. So that's some of the associated risk, but also a pro of getting cash flow positive business or assets. And then three is, does it have recapture? Right? And is it going to have equity build, or am I going to make positive ROI as it builds equity down the line? Right? Kind of like as you look at real estate deals, right? Am I going to get a good payout, a multiple down the line? And is it worth kind of the income or the recapture, right? That's a lot of the things that people listening today takes away from too good to be true. Depreciation recapture, which is basically the government's rule of saying, hey, if you get this big loss deduction year one, if you make money on that a couple years later, greater than your basis, you're gonna have to recognize it as ordinary income.
Yeah.
Right. And that sometimes takes away, was the juice worth the squeeze from what we did really at the end of the day. And so those trade-offs we go through with each and every client. And if all three of those aren't met, then typically we wouldn't do something there for them unless they really wanted to implement and understand the risk and what they were getting there. But typically those three have to be met, right? And typically those are, well, you can either write, a check for 100 grand to Uncle Sam, not pay 200 grand to Uncle Sam, get cash flow positing asset, and then a multiple target down the line. Most people are going to take the other three options, right?
Yeah, absolutely. Well, as we wrap up here today, Davis, I know we kind of touched on this before, but when's the best time to start planning for your 2026 taxes? I know we just wrapped up, the 2025 tax year earlier this month. When is the best time for start planning for 2026?
The answer will always be, Chris, as you probably know at this point, sooner the better for clients,
Yeah.
right? The sooner, because again, this is a lot of education. We have 96 CPA approved strategies that go into these custom plans for your clients and our clients there, Chris. So the sooner we can educate around how they work, know the best amounts for a client's own circumstances, because everyone's circumstances are different here in this type of planning, the sooner we can then make sure that gets implemented, change those withholdings for W-2, change what we're not having to pay in quarterly taxes. Because again, once the tax is lost, like we talked about today, Chris, we're now having to wait for a refund if we wait to go do something for it. So the sooner we can start that process, the sooner we can provide value. But then, especially right now, right after tax season deadline here for April 15th, now people are really starting to come in or just naturally people are pretty reactive versus proactive, even when we work with them multiple years. So now that it's getting crazy, we'd be happy to serve your clients and whoever we can help that want to take this serious and get this going.
Great. And we're going to offer a free strategy session with your team if you're listening here today. And you can just email me at chris@nextlevelincome.com and just put taxes saved in the subject. So just email chris@nextlevelincome.com, put taxes saved in the subject. And what's the best way for our listeners to learn more about your team?
Yeah, Chris, we do a lot of case studies. We're big on showing real life client results. Clients really should learn about this, make sure it's the process they're looking for, because it is a process indeed. So if you look at taxessaved.com and our YouTube page at taxessaved.com, there's always a new case study of the week I put together there for loyal listeners and anyone that wants to learn. So you can check us out there.
Awesome. Davis, again, this is one of my favorite topics. We'll have you back on later this year as we prepare for the end of the year. But if you're not happy with your tax bill from 2025, take Davis's advice, get started sooner rather than later. Get your free strategy session. Email me, chris@nextlevelincome.com, put taxes saved in the subject line, and we'll get you connected with the Taxes Saved team. Davis, always good to see you.
Hey, thanks, Chris.
Hey, Chris here again. I hope you found this episode valuable. Now, I have one more thing to gift you. We have a page for my coaching clients where you can get a free copy of my book, as well as much more from previous guests on the show. Just check out nextlevelincome.com/coaching to get a free copy of my book, audiobook, and much more. I'll send you a copy of my book and cover all the shipping costs as a thank you for listening to the podcast. Also, please like, share, and take just 90 seconds to give us a rating on Apple Podcasts.